We're going to lead off with a public hearing for the proposed fiscal year 2020 municipal budget. At this time, we'll ask anyone from the public who would care to speak to please step up to the microphone, state your name, address.
I have 10 copies of my presentation.
Thank you very much.
Dr. Vincent, he spoke many times before, more recently. The package I've given to you covered, first page is my comments, second page is the PRAC, Public Employees Retirement Administration Commission, summary overview of the Quincy pension system. Pages 3 and 4 are from Stone Consulting, the city's actuary. The two issues I want to address tonight are of detriment to me as a taxpayer and to you as elected officials and those in the executive branch if addressed appropriately. The situation is that two significant financial problems face the city, and there's one short-term in this budget question that needs to be answered. The attachments are referenced by, highlighted Roman numerals. On the second page, which is, which is the first page from the overview, the funded ratio for Quincy's pension system is 46.8%. Of the 117 communities in the state, there are only 4 communities less funded. They include Fitchburg, Fall River, the Paulston Teachers, and Springfield. Weymouth is at 66%, Braintree is at 65%, the state median is at 63%. If you follow to the next Roman numeral, the unfunded liability as of 2017 was $359 million. Roman numeral 3, the return for 2017 was 16.8%. Hooray. Roman numeral 4, the unfunded liability in 2018, after a 16% rate of return, grew to $403 million. Number of years to theoretical payoff increased by 1 to 2037, when Mayor Koch will be running for his 12th reelection. The funding authorization of $29.7 million is included in the fiscal year 20 budget. I cannot explain why this differs from, I had to correct this number, $31.5 million amount in the Stone report for the required expenditures and the PRAC's appropriation level for FY20. My Roman numeral 5 reference talks about a $33 million number. 1.5 of that approximately comes from the Housing Authority, because they're merged for this. There is a difference in the appropriation and in the budget and the quote, the required appropriation from both the actuary and PRAC. The liability is likely to increase, and let's put it in perspective. In order, there is, I think the budget document says there's $31 million in excess levy capacity in the current year. If that was put in the budget, dedicated entirely to pensions, that would raise the funded ratio to 52%. In order to get to the median funded ratio for the state, you would need to spend immediately approximately $100 million just to get to the median funded ratio. That's the good news. The second point I want to raise is OPEB. Some of you were here before when I talked about this. OPEB is short for Other Public Employee Benefits. It really talks about the liabilities for health insurance payments for retired employees. And yes, accounting principles changed and nobody did it for long periods of time, but I need to put it in perspective. The current budget, and in my comments, I talk about the references to the pages and the detail of the budget document. The budget is proposing a $250,000 appropriation for OPEB. I had trouble finding, I think the balance is about $1.5 or $2 million, citing a need for an actuarial estimate. I spoke of last year or the year before, in 2016, PRAC did a preliminary study and estimated a $4.6 billion liability statewide, and for the city of Quincy, that liability was $350 million in 2016. That liability has not decreased. The amount exceeded, at that time, the amount exceeded unfunded pension liabilities, and has only increased because currently you're using a pay-as-you-go approach to pay for the retirees' health insurance. Current appropriation request for FY20 for health insurance is $44 million. That includes both active and retired employees. Unlike pensions, you will see, much to the chagrin probably to some public employees, that for current employees, they are largely funding their own retirement. Most of their annuities are being paid through their 9% contributions. I had a meeting perchance with the president of NAGE, the guy across the street, a few years ago. They represent mostly clericals. He indicated that they did a study that most of their clerical people would outlive their personal contributions. So your current employees are covered for pensions. There is the day you hire a new fire class, the first day they work, they begin to accrue a post-retirement health care liability. That's not counting those people already retired. So what do we say? If those of you who aspire to be the executive post-Mayor Koch, and we all know who you are, you're going to inherit a difficult financial situation. The liabilities for pensions and health care are going to go up. The funding is going to have to come out of the current tax rate, and it comes not from short-term benign neglect, but long-term lack of attention to the problem. The sooner you can I know you can't do it now. My role here as a taxpayer and as a financial consultant is only to bring the issue to the forefront so that somebody starts thinking about bailing out. At my age, I'll probably be dead or gone before you solve the problem, but you are the people that must live with it. Thank you very much.
Thank you very much. We're still in the public hearing portion of this Finance Committee meeting. If there's anyone that wishes to speak on the proposed 2020 fiscal year budget, please state your name, address, and case.
Bill Zamzow, 356 Washington Street, Quincy. I find it unfortunate that Brian's not here tonight to see that I'm going to be one of the shorter speakers. In any event, yet again, the administration has presented a woefully inadequate budget document to this body. For starters, Section 1 is a classic example of why the Pentagon all but refuses to allow the use of PowerPoint for major presentations. Key to this view is that PowerPoint can present complicated matters in a neat and clean fashion as resolved, when in point of fact, reality is not so, not even close. In this instance, Section 1 is also full of fractional truths presented as whole truths and representations that are at best misleading, if not also purposefully so. And as for most of the text, it's better suited for lecture notes for an introductory college course of municipal governance, not inclusion in a city budget. Next up, Section 2, and where some actual budget data are included, is a disgrace. For example, nowhere does it note prior year actual spending. Absent such data, it is impossible to discern if the 2020 budget is valid. There is no excuse for this. The city's Munis accounting software can readily generate reports noting such essential data, given but a few clicks and keystrokes. Instead, however, the administration goes to the trouble of copying just appropriated figures, as well as in highly consolidated fashion, and then pasting them into a spreadsheet that can only be viewed as a waste of time and energy, as, again, such could be done as well as much more richly via an automated report-generating software. Other problems include that there are a number of new jobs proposed for 2020. Some of them appear to be wholly new positions, which, to the best of my knowledge, have not been approved by the council. The administration was called on this previously, as well as chided that this should be addressed separately from the budget review process, but it appears to be back to its bad habits. In short, fool me once, shame on the administration. Try to fool you twice, shame on you. If I were you, I would suspend review of the budget until the new positions are duly considered so as to send a message to the administration. Next, the pension line item. It is light by several $1 million from what the city has been directed to put out by PRAC, so as to endeavor to eventually fund the city's pension obligations. To follow up to this gentleman's point, the shortfall is basically Quincy Housing Authority, Quincy College, and I think the water and sewer departments, which are counted as separate enterprise funds. Better practice would be that these amounts should be included within the general fund budget as some manner of transfer payment, because at the end of the day, local taxpayers are on the hook to cover the pension if there are any shortfalls. Moving on to Section 3. It is largely a waste of space. The general narrative for each spending unit could easily be added as headers to each unit in Section 2 and the duplicated numbers deleted. In short, it's hard to see this section as anything other than an attempt to puff up the length of a woefully thin budget. This budget's, 150 pages, maybe, if you get creative. The reality is you look at Weymouth or Braintree, there are 150, 200 pages of dense paper. If you took the space out of Quincy's, it'd be well under 100 without making my suggestions. As for Section 4, department headcounts are again cuts and pastes of data that the city software package could have readily incorporated into a proper budget report, including the noting of authorized headcounts and actual employment levels. The city's budget notes personnel breakage down to tight projections, and there is thus no excuse whatsoever for the annual budget to not do the same. Next up, for the first Section 5, the water and sewer budgets. These budgets are just as woefully inadequate, noting essential data as noted earlier as regards Section 2. And finally, there is the second Section 5, the so-called downtown budget. Again, problems include woefully thin particulars a la Section 2. More importantly, while such a separate accounting has merit, it has not been approved by this body to so operate the Quincy Center DIF zone with essentially separate enterprise fund accounting. Additionally, absent particulars in light of past statements by the mayor, this new accounting treatment suggests that the plan is to tap some of the DIF special tax district income to be allocated for paying for DIF debt to also be used for general operating expenses within the Quincy Center redevelopment special tax district. Granted, at least some of this accounting approach has merit. It is still a significant departure from past practices, and especially given the apparent inclusion of local service sorts of spending from the revenue. And more importantly, is a policy change from past practices, and which one can only reasonably assume should have been brought before this body for approval both previously and separately, rather than jammed into being during the annual budget process. In closing, as well as again, it would be only reasonable and proper to suspend the review of the 2020 budget until this accounting change and the adding of the new positions is first duly considered. In short, the whole of this budget is no way to run what is closer in total to a $400 million operation. Thank you.
Thank you. Is there anyone else from the public wishing to speak?
Good evening, councilors. I'm Danielle Kemp, 1 Adams Street. I am on the board of Access, which is a disability rights group on the South Shore. And I want to thank you for reinstating the ADA, the Commission on Disabilities last week. That's amazing. But one thing that I noticed was missing from this budget when I was at the presentation is an ADA coordinator, and budget for things like CART. We have a deaf citizen of Quincy that has been trying for months to get to be able to have, CART is basically text captioning live, so she could see what's going on in these meetings. She gets the runaround like crazy. She also happens to be a board member. The process on the website is that you contact Jay Duca, who doesn't have any training on what is supposed to be done in that case. I get it. He's the building inspector. Why would he? But we need to have someone in that position that does have the training. Back in 2004, Quincy was sued by the federal government for lack of ADA compliance and settled and did nothing in the settlement. It's a lawsuit waiting to happen if people don't, if Quincy doesn't get with it and we have somebody who actually is following things. None of my friends are litigious, but it's just when you're looking at the risk of the city, if we're not forward thinking, it's going to happen. Thank you very much.
Thank you. Anyone else wishing to speak tonight?
John Rutherford, 62 Grunwall Road. I'd like to thank you for the opportunity to be able to speak. I'd like to also thank everyone for your service this year. It's very tough being a city councilor. For anyone who is watching at home, taxes go up every year. They don't go down. It's the city council's job and Mayor Koch's job to spend the tax money that they tax you wisely. So I just want to thank you for looking out for the people that live in the city of Quincy. I was thinking, like, you know, I would like to actually do something that you actually do, okay? So I'm going to present something that, you know, I was going over the budget. Actually, you know, in difference to what Mr. Zamzow says, after years and years and years of the same budget format, I was able to just go to it and go zoom, 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 and make my own little spreadsheet and pick out a couple departments and stuff and do my own little analysis and stuff. And when it comes to documents, you can go to the Department of Revenue. All our documents are there online, or you can go to Emma and look at all our bond documents. I hear people asking about, where do you get the best documents? They're from the state. You don't really get them from the city. So, I mean, I don't ask public records demands for anything because you maybe get something that's a year old if it's from the city of Quincy. But anyway, okay. It's all about department heads, okay? And it's about, like, where do these numbers come? It seems everyone got, am I correct, Mr. Walker, a 3.9% kind of across the board raise for department heads. When I did the math, you know, I was looking and I said, you know, why is someone making $127,936? Well, then when I was copying and pasting, this was my list of people I got. Mr. Grazioso, who does a great job, he's on the list. Mr. Hines, he's at the 127,936, also does a great job. Mr. Fatsy's does a great job. He's on the list at 127,936. City Clerk Nicole Crispo, she'll be there soon. She does a great job. 127,936. Mr. Timmons, again, same number again. 127,936. Now this is where I think you can do this. Council Palmucci, maybe work with me here, okay? If you look at Board of Assessors, Colleen Haley, she makes 127,963. Now, did they make a mistake with the 9 and the 6 and the 3? Why is she making, you know, I think we should reduce her by $25. I don't understand. And also, Mr. Kavanaugh, he's also making that same extra $25. So he's the Director of Municipal Finance. I wish he would have caught that little mistake, but I think we should at least take away that $25 from both of those people and get that number the same. Now, you know, from coming to too many meetings myself, okay, I've been coming to these meetings till I'm blue in the face, and, you know, unless I am an elected office or city councilor, I'm kind of getting sick of coming myself, okay? And what I need basically is, I don't understand, we can't add to the budget, okay? So as a city councilor, I can't come up here and say, I want this, I want this. All I can do is subtract. So you can take off that $25. We could even go a step further, and this would be like to Mr. Walker, who does a great job. And I just heard about Mr. Duca. I can't understand how Mr. Duca isn't on that 127 list, okay? He should definitely be up there. But he's at the 120. So I almost think until Mayor Koch raises, and these are the people I want raised up to the 127. I want Mr. Duca. I want Deb Coughlin, who for some reason, there's another level down, which is at 112. She needs to be up top. Chuck Phelan, if he was still here, he'd be on that 127 list. I'm not sure who the Director of Information is, but we need a good one. That should be at the 127 too, okay? And the City Auditor, Sue O'Connor, I'm putting you on that list too, okay? And the Personnel Director. So what I want, Mayor Koch, is next year to put all these people at the 127. And as a penalty, take away that $4,900 from those top 7. That's $149 every week. And let them complain to the mayor. And I got a feeling next year, everyone would be on the same level. So I can understand maybe having 1 level or 2 levels. But, you know, if you also look at that other thing about the 120,000, that's the same thing. For some reason, Mr. Casani, he gets 120,841 instead of the 120,148. So could we at least maybe take $700 away from Mr. Casani and get him down to the other tier? So that's just my crazy idea of what I'm thinking about. So other than that, like I said, you know, the pension fund is going to go up. We need to pay money into that, but that's something that happened a long time ago. I mean, the health care is going to go up. Taxes are going to go up, but when I did a study of taxes on the South Shore, Quincy taxes are going up at a slower rate than other communities on the South Shore. So there's really nowhere to move. So I suggest anyone who doesn't want to pay taxes, your only alternative is to move to someplace like Taunton or New Bedford. And I'm getting rid of my multifamily in Taunton right now, and praise the Lord, Jesus. Have a nice day. Thank you.
Thank you very much. Anyone else wishing to speak? That being the case, we're going to go directly into the regular portion of this meeting. Madam Clerk, will you please call the roll?
Counsel Kroll. Counsel DeBona. Counsel Harris. Counsel Hughes. Counsel Yang. Counsel Mahoney. Counsel McCarthy. Counsel Palmucci. Chairman King.
Present.
8 members, you have a quorum.
Pursuant to the open meeting law, any person may make an audio or video recording of this public meeting or may transmit the meeting through any medium. Attendees are therefore advised that such recordings or transmissions are being made whether perceived or unperceived by those present and are deemed acknowledged and permissible. Before we get into the opening presentation, I just want to state to my colleagues we're going to be implementing Rule 10 tonight, which is about debate limitation. So any member shall be allowed to speak on any one subject for a period not to exceed 15 minutes. For matters coming before the council in the first instance not being referred to committee and/or requiring a question and answer period, the foregoing limitations shall not apply. A member shall be allowed an additional 5 minutes to speak after every other member choosing to speak has spoken. So I ask my colleagues to kindly make their comments succinct and relevant to the budget discussion this evening. That being the case, I'll invite Mr. Kavanaugh, Director of Finance, for the opening presentation on tonight's budget.
Thank you, Mr. Chairman, councilors. We'll begin tonight with the revenue update of 2019. As all of you are very well aware, the city has 3 main sources of revenue. Property taxes account for the lion's share at 75%. State aid or local aid, depending upon your perspective, is a second important component at 14%. And third, and more of our focus tonight, is local receipts at about 11%. Those percentages change small amounts year to year, mostly with state aid becoming less and less of the pie as their finances would dictate. But not to bury the lead, local receipts, I'm very happy to report, are trending higher this year, 13.7% higher in fiscal 2019. Projections indicate that could amount to about 3.8 million more above our estimate. We'll go into a bit more detail in a moment. State aid, more good news, also trending up at 4.6%. That was the latest word from Beacon Hill. In fact, I've gotten the same update report amount each year, each week of the last 3 weeks from Beacon Hill. It's $50,700,000, so I think we're going to be right about that number. And last but not least, the lion's share, more than 98.4% of the property taxes have already been collected for fiscal 19 at this point in the year. Local receipt highlights, we always use conservative estimates in budgeting, especially on revenue projections. You get yourself in a lot of trouble for obvious reasons if you plan on spending money you don't have. That said, some of the more notable and familiar sources of local receipts are all showing significant increases 85% of the way into the year. Motor vehicle excise taxes are up 7.5%. That would project to $12.1 million, the highest we've gotten in probably ever. That would be an increase of $850,000 roughly over last year. Licenses and permits are up over 18%. That would come in at somewhere around $5.3 million if that holds. And of course is an indication of a strong local economy. On the next chart, the longer chart, go back one, Eric, taking a look at the groupings of all the revenue accounts, we've listed them by the way the Department of Revenue categorizes them on the tax rate recap. We also sorted them by their dollar significance to the revenue, most revenue to least. And you can see excise, of course, at the very top. Licenses and permits, as I begin to mention, our building fees are within that grouping. That's up significantly this year, over 18%, could total to $5.3 million or an additional $840,000. Miscellaneous recurring income is driven by a Medicare D reimbursement. Last year at this time, they told us expect nothing from Medicare D. It's a federal reimbursement program to the schools, and it was on the cutting block. It survived. We're more than $800,000 better for it. We're hoping it survives again. Calls obviously are being made, but we don't know yet about 2020. The meals tax, near and dear to everybody, eating out, it's up again this year, 7%, which is another $130,000, and will top $1.9 million this year, highest we've reached. And so on down the list. I won't go through the detail. Penalties and interest is way up, investment income, fees, fines, and so on. We've included a couple of visual charts, graphic pie charts. Sometimes it's easier for people to process it. Picture worth 1,000 words. Don't need interruptions. So the chart speaks for itself. I won't go through it for you. But you can see that motor vehicle excise and license and permits dominate. A smaller grouping of accounts, there's 10 accounts that much smaller pieces of the pie that wouldn't even account for, or would account for about 20%, 25%. In the year-to-date receipts that was done last week, this is representation of some of the line items that you'd have a lot more familiarity with. You can see their impact to the budget as a whole, meals tax, for instance. And again, we concentrate on some of the larger accounts. If you see in the top left-hand quadrant up there, 63 of the smaller accounts don't even add up to 20% of the total. That's why we keep kind of harping on certain line items. State aid, I just wanted to get back to momentarily. It's $50.7 million. We'll net out at about $46.5 million after the assessments for the MBTA are subtracted from that total. So the state aid portion is not finalized yet, but we think we can pretty much rely on these numbers. And we can take questions on revenue at this point.
Councilor DeBona.
Thank you, Mr. Chairman. Mr. Kavanaugh, thank you for coming in. It's always glad to hear that we are making a little bit more for the city through the revenue, the local receipts. First item up there is the motor vehicle excise. I know you have it here at a 7.5% increase, but you had it at fiscal estimated for 19. You have it at 847,000?
At this point in the year,
Yeah.
what we do now is project forward from, I think we did it on May 9th, it was 85% of the way through the year. And we prorate that projection through year end. It also meshes with if there are additional commitments going out from motor vehicles to Quincy residents.
Would you happen to know, I know you got the total revenue or the total dollar amount. Do you have the motor vehicle vehicles? Do you have the actual, how many vehicles are paying into this? Do you have it by vehicle?
You're talking about an inventory?
Inventory
of the-
vehicle,
of
yep.
the assets?
Yep.
I would defer to the treasurer on that. I know there was a discussion last year on an item count. I'm not sure the status of, or how many thousands of cars are registered. I know you in particular were looking for additional information. I don't have that, the treasurer may.
The reason why I asked is, Mr. Kavanaugh, is I know me and my fellow council from Ward 4 put a resolution in about making sure that some of these new buildings, these new apartment dwellers are paying into these excise tax. The motor vehicle, when they register their vehicle, they should be switching over from these New Hampshire plates and Rhode Island plates and New Jersey plates that we see from out, or even other towns, other towns that, well, actually, no, it's in
If they
the
lived
state.
in
It's- I'm sorry.
Boston, they'd be crazy. They'd be paying more.
They would pay more, yeah. But in a nutshell, I want to know how much more vehicles, how many more inventory are we actually collecting on? It would really be helpful just to see year to year, quarter to quarter, how many more apartment dwellers or how many more units, and we can kind of, I think this would help our planning department as well, to find out how many more vehicles are coming onto the line, new movers moving in that have vehicles.
I remember the discussion last year, and I know that people had a few different ideas on how to advance it in welcoming kits and information when they first come to the city to get information out to make sure they register their car. It also bleeds over into residential parking problems if you're going to do stickers or what have you. So, if the car is registered, we know they're paying somewhere. Question is to get them to do it accurately and correctly to the city they're currently living in. The reverse would obviously be true. We'd have some Quincy people who had moved outside of town. If they don't change, they're still paying us. So there'd be some payback there from people just being slow about changing their paperwork. But again, we collect the money and we count it, but the actual counting of the assets of the cars or the license plates, that would be, I would
this-
start with the treasurer. She may talk with the registrar.
I mean, this particular item here, you're estimated to make $12.1 million this year, which outweighs everything else by at least double. Some triple, quadruple. This is the item that we really need to zero in on with helping out the citizens that are here. This is a huge receipt that we're going to get for the city for our taxpayers. We should be able to have a better oversight. What are you doing as a welcome package? Is there a welcome package going out to each new resident?
I was getting that from other agencies and the people that are involved in that. We don't, in finance, send out anything about registering.
Is there any jurisdiction that we as a legislative body of government can do to, so you just put a lease on this?
Start with the Chamber of Commerce, that they may be, the people to contact first. I don't know about a Better Business Bureau or
Yep.
any type of welcoming committee.
I'm just trying to see how we can boost up this revenue. What can we do as a body here? Can we do to help you? What can we do to help the other residents of the city getting this payment? So I know I ask you every year about this because I think this is a very important aspect of us getting these receipts and making sure that people that are going to move here that have a vehicle that are actually going to pay into this. The other ones I see, another one that's a little bit down here, is that going to be projected at 1.9 is the penalties and interest on taxes and excise. That's also huge too, that we're getting a little bit more if nobody wants to pay it on time, or what's the fine? How do you just don't pay it, or
It's based on the amount of time that you owed and what the property was. Sometimes people, as you know, things happen, people fall behind. We're always keeping track of it. I know that the assessor's office and the treasurer's office have a number of different programs to help people when they fall on hard times, when they can't make the payment so they don't lose their home. There can be promises to pay at a later date. There can be promises to pay when there's a transfer of property. Perhaps somebody's elderly in the home, they need more time. The clock runs on the interest, though, unless that became part of some settlement agreement. So we track all of that. Of course, when properties get sold and do change hands, that's when the payments and the interest and the penalties come forward. The transaction won't go through unless all that's back paid. So it's a process of keeping good records and keeping track of it, and you got to add it to the bill when property changes hands.
Just happy to see at our projection that we're going to be making another 847,000 more from last year's, 11.3 million. Right now, we have about, what is it? We're projected to go about 12.1 million?
Just in that category alone.
Just in that
too.
category, that's-
In total local receipts, we're approaching the $31 million mark, and we had projected, I think we were in the $27 million range when we filed the tax rate recap.
I'm very happy with that. Just the last thing on the state aid, 1.25 million increase in Chapter 70. Is that across the board, with other communities, or?
No, that's just Quincy's.
Just Quincy's, but I'm just saying, when I say across the board, is everybody getting an increase, the percentage-wise, about that same?
For the most part, when they're adding to that pool of money, it's by the formula that they've determined that cities should receive funds based on the income levels, property valuation levels. It's a complicated formula. It goes along lottery lines, which I'm a little
So there's an
more familiar
algorithm,
with.
like there's a method, a formula for this?
There's a formula that's been set by the legislature, and it hasn't been changed for years. Been a lot of talk about it, but it's been pretty much the same.
Well, I'm just happy to hear that some of these numbers are going up, and it's going to help out the taxpayers of the city.
Yes.
And we just have to continue to have better oversight on getting these receivables into us, so it will help us out in the long run. So,
Try to get that answer for you. I think I told you the same thing
thank
last
you.
year.
For this part of the revenues, thank you, Mr. Kavanaugh. If I have any more else, I'll call on you when we get to the other departments.
Absolutely.
Thank
I'll
you
be
so
here.
much.
Counselor Liang.
Thank you, Mr. Chairman. Good evening, Mark. How are you?
Good evening. How are you?
I'm good, thank you. I always really enjoy this part of the presentation because it's really helpful to see, based off of our estimates last year, sort of how we've done in this last year with projected revenue. And, it's always interesting to then also look at that and see what you're projecting for next year. So in that process, there are some line items that I come across that I'm not fully understanding what they are. So if you could just clarify, there's two of them that I'm just not understanding. One of them is under penalties and interest. It's 38D penalties.
38D?
Yeah.
I believe the 38D penalty, and if I don't get this right, Colleen's going to be mad, but I believe it relates to property owners of multi-family buildings. They are required to file an income statement annually. I'm not sure if that goes directly to the city or both to the city and the state. That has to show naturally what the rental income is. I think it shows what the profit that the landlord has for that building is. If they don't file the 38D, there's a fine involved. And I think it's, well, I'm guessing, but I think it's like $250 to $500 in that range.
Okay, maybe this is a question for Colleen then later on, because this is projected to be a lot higher than we saw. So I mean, I imagine it's
Well,
because people are filing them on time now and we're not, issuing that many
Can be a
fees.
question of enforcement. Sometimes it's tricky. When you see numbers go down, you think there's a problem. It might actually be more reflective that there was a program or an aggressive outreach to enforce that particular law in a previous year. We're successful, more people are in compliance, and you get less people reporting because they're caught up to date.
Right.
I
Yeah,
know
that makes sense.
That comes out in one of the fire revenue lines that dropped this year. And
That's
we were-
actually, not to interrupt, but that's actually one of the other areas that I was looking to clarify. It's under rentals. Is that the one you're talking about?
What was it?
It's under rentals. It says Fire Station 2.
If it's a fire fee, if it's related to a fire fee, I don't think it was called that. But there was a fire fee that had dropped off that concerned us a while ago. When we looked into it, It was actually that because of the wood frame construction, which was a big issue a couple of years ago, the current chief insisted on a Quincy fire detail watch at a construction site that had the wood frame. He was concerned and he wanted the detail there. So the fees in that case were very, very high that year. Now they've come back to earth. It looks like there's a problem we're not collecting. It was actually, the aberration was the year before when revenue was very high.
I see, okay. And, with those two lines then, because they are coming in so much lower than projected, are we making those kinds of adjustments to project out revenues for the 2020 year?
We always do. We're always trying to reflect what the reason is for the amounts coming in this year, and is there any story behind it so we don't make a mistake coming up. For instance, the Medicare D, we were told under miscellaneous recurring, we were told don't expect anything. It's on the fire cutting line in Washington. So put down a zero, and we did. Well, over $800,000 came in. That's great for us. But as we look at 2020, we're asking the same questions. Can we count on 820? Is it going to be 410? And we haven't gotten an answer yet, and it's already May 13th.
Yeah, no, thank you for clarifying. I appreciate it. Again, it's just helpful to not only understand the process, but understand what we're looking at for
Absolutely.
anticipated revenue lines. And, based off of what you're showing to us, your department tends to lean more conservative in those projections, which I appreciate. And it's always good, to come above and beyond that. So my last question for you doesn't have to do with this document here where it has the details, but more with the sort of summaries in the budget book. And one of the front pages in the summary says that, there's a chart for new tax growth from fiscal year 2014 to fiscal year 2019. And between 18 and 19, there's actually a drop of $200,000.
In what line?
This is just part of the summary in the front part of the budget book. And it's under section C, number 2, when it talks about property taxes, page 10 in the budget book. There's a chart in the top right-hand corner of that page. It says new tax growth, fiscal year 2014 to fiscal year 2019. And again, the part I'm referring to is where it says fiscal year 2018 was 6.7 million, and then fiscal year 2019 was 6.5.
Obviously, all of the numbers going from 2014 up through 2018 are accurate. 2019, I believe that would represent an estimate. And whenever we estimate revenue, we're going to be conservative.
Well, but this projects new tax growth, isn't it? Or it depicts new tax growth.
Right.
So we're down, according to this chart, I'm reading it as we're down from 2018 to
year.
2019.
19 is an estimate, because we're only in May. Okay.
Is that what-
I can address that, Counselor.
Okay.
This
I'd
is-
be interested to hear, because Councilor Palmucci, I think, just answered it, but I'd be interested to see what you have to say too, if you could.
It's new growth, so it has to do primarily with construction. So more properties came online in that year that were new growth. And new growth tax revenue is because that property value didn't exist the previous year. So new growth is the add-on above that, because you can't show % growth if 0 is your first year. You have to be infinite growth, which would be great. I'd love it, but so that's just a new growth that occurred in FY18. It was a particularly heavy construction year. You can see that reflected in permits and fees in that year too.
Okay.
So that's the actual from the next year. Still very healthy. 6.7 million new growth is.
Yeah, no, and it wasn't a significant drop. I was just curious because it did drop, right? And, physically, you do see a lot of growth and construction happening in the city. Does this not include then the construction happening in the URTP in this district?
Yeah, so it has to reach the tax roll. So that construction usually has to be completed. That's a better question for Colleen.
Gotcha.
It has to
Okay.
be completed.
All right, thank you both. I appreciate it. Thank you, Mr. Chairman.
Absolutely. Okay, then let's move on to the meat. You want to start with your section,
Sure, going right into finance.
municipal finance?
Thank you, Mr. Chairman. The Municipal Finance Department budget decreased 4.9% this year. The main budget lines are on page 5 of the first section of the budget book, and they are all correct. The actual budget cut was $83,028, or just under 5%. The main reason for the cut was a reduction in the acquired equipment line, which is used for vehicles, not finance vehicles. We don't have any vehicles. But citywide, where a purchase may become necessary during the year, or may be planned obsolescence. And it's usually for the smaller departments, the Inspectional Services Division, or perhaps fire alarm. They don't have vehicles that get overly used so that we can usually stretch them out. But when we do have an accident or a blown engine, that's where we go to typically. We have used the line on occasion to buy cruisers. But this year, it's a little bit different. We have the CIP that's also in front of the body. So that allowed us to take the step to cut the budget line for vehicles and reduce the budget number. So that's the main reason for the reduction in finance is that. Let's see, there are other increases in payroll, all cities. In fact, you'll see this across the city in every department. We're given a 3% raise. That's the same for finance, except for two positions. Two positions received an upgrade. The chief analyst economist position was raised to the same level as other senior financial management employees. There are 6 in the city now. They'll all be paid the same rate of pay. Before it was a little bit all over the place. Now they're all standardized. Also, the bookkeeper position, we're looking to upgrade that. She's maxed out at level 10, and she took on additional responsibility this year, and we're also looking for her to take on added responsibility in 2020 in regards to the DIF. The interagency compensation line is another increase, but it is budget neutral. That line came as a suggestion from our CPA firm during the college's transition through a difficult time. If you remember last year, they asked some of our staff to review some of the data at the college and help them assess the current state of affairs. Much of the work, the review, the analysis was done nights and weekends, and it was very helpful. But at a certain point in time, it was time to cut the cord. And when we went to do that and felt we had helped them all that we could from finance, they wanted to continue the relationship. They wanted us to keep working with the college. So they asked if they could pay for additional time in the upcoming year. We weren't quite sure how to handle it, unique request. We weren't about to give people up. So we went to the CPA firm. And they said, it is actually done. It's done more than you think. When agencies see a particular skill they don't have and they want to access it. And it's done through this interagency compensation line. It's a payment from the college to finance, like a pass-through, and finance will put that into payroll for the individuals that help the college. So again, it's budget neutral to the general fund. I think
Okay.
that's it.
Motion to approve. On the motion?
Yes, I have one question.
Councilor Yang.
Thank you, Mr. Chairman. Okay, Mark, so it's similar to when I look at the revenues, right? When I look at budgets, I always like to try to see, what's been expended to date. Granted, there's still 7 weeks remaining, but some of these are drastically lower than what could be, I think, spent in the last 7 weeks. And so I'd like to just get an idea of, why it wasn't spent and then how much is needed for the following year. And there's a couple of items in here that I picked up on that sort of fall into that category. So the first was overtime. In the last 2 fiscal years, in 2018 and 2019, they remained the same, but this year it had jumped up $225. But this year, we only had gone through about 23% of that item. So is there a particular reason why you're estimating that there needs to be more in that line item for this coming year?
Crunch time for us, well, I mean, there's 2 main functions for finance other than doing the payrolls and accounts payable warrants each week. That's never ending, but that's more regular work. The year-end work is considerable for closing the fiscal year end. That's when a lot of the overtime comes into play. The general ledger accountant, as well as staff people, as we're tying out the year end, that's when any discrepancies have to be completely cleared from the books, and they can go well past normal work hours. So most of the overtime will take place in the last 6-8 weeks. We even go into July just a little bit before we close the fiscal year. So that's why it looks like a buffer. It's really a late expense if it's needed. If we don't have problems, if we don't have extra curricular problems to spend time on, then it'll fall to surplus.
Okay. But again, is there a reason why we went from 5,000 to 5,225 this year? When
In
you
which
kept it, when
line?
you kept it the same for 18 and 19, you kept it at 5,000, and then you moved.
Percent increase across the board. You'll see that in every city
Gotcha,
department
okay.
for the increase in payroll.
No, that makes sense. And then for dues and subscriptions, you also have that jumping up. Again, the last 2 fiscal years, you had it at 10,500, and this year you moved it up to 12,000. Are you anticipating something that you're subscribing to, that there's going to have to be new fees for?
Yeah, that's Eric Mason in my ear about additional subscriptions he needs for additional programs he has, and if I don't get them, the world's going to end.
Well, he's very good at his job, so I trust his assessment of that. Thank you for clarifying, and it's just helpful to know where these jumps come from. I appreciate it. Thank you, Mr. Chairman.
Councilor Mahoney?
Hi, I just have a couple of questions. One is, because you mentioned it, that there was a 3% raise for certain departments, that you brought them up to level in different, would you be the correct person to be able to provide that to us when you have certain levels? I mean, some organizations have levels in municipalities, or, in banking, they have grades. When you talk about something, you're trying to make sure everybody's at a certain level, it's helpful for us to understand what those levels are and what gets you to that level.
Thank
I
you.
understood what you said when you were talking about the chief economist, because there's financial analysts in different departments, and I could see that being that. But it would be helpful if we could have an understanding of those jobs and what those jobs mean and how you get to those certain levels. That's something we don't have, and there's no real description to be able to get that in the city.
I think that it would be
And
beneficial
Human Resources could do it too, I guess, but.
to give you a listing. The gentleman who spoke in the public comment section was accurate. One of the efforts that we made this year and coming into this budget was to have a much more standard level of expectation for the department heads and the general public as well, so that there is a top-tier level of management, a second, a third, a fourth, and so forth, right down to the senior financial manager position that I mentioned, which I think we have 6 of now. Those will all be standardized. There will be a level of department heads that will be standardized. So we can provide you with that. It's an effort we made to level the plateau for all those positions. Below management, I mean, that's something we've worked on for the administration.
Yep.
Below management, you're largely dealing with unions.
Right.
So
No,
there's steps and grades and so forth.
Yeah, and steps and grades for unions is fine, but what I'm really talking about is when you're in management level, you're not in steps and grades for the unions.
Correct.
And you can certainly break that for the different unions. That's an easier ask, actually, because with the unions, you can say, what are your steps and grades, and provide us that information for each individual unions. And then also, what are the specifications for you to be able to get to those steps and grades? Like, do you have to have, if you're working in the plumbing department, do you have to be a licensed plumber? It might be that, and you have a certain grade. But in these particular line items, when you're talking about it, we don't have a description of what it is for you to be able to qualify. So maybe that somebody might be a junior to get promoted to a chief. What do you need to do that? Or is it just, I don't know what it is. I'm asking that so that we can have an understanding of that.
And I know that, I'm in finance, not HR, but I know that there has been a conscious effort talked about, and I know that progress has been made. I don't know if they've completed everybody's description that goes along with it. Naturally, that would be something that should be done.
So simply, Mark, it's just because you mentioned it, and, because you mentioned it and it's fresh, and on top of it, I'll certainly mention it when we talk to Human Resources, but I think that's an important thing, and the fact that you took the time and effort to call it out in the budget, because you were presenting financials that will go across multiple different departments, and even if Human Resources is doing that, I would imagine that that your role would also play a part in to make sure that it's economically feasible to put people at the same level, if that's the case that we're trying to do across the board. So I'm just trying to have an understanding of that. And then secondly, not to, because we just asked that question about, and I'm just going to follow up with Councilor Liang had just said the $5,000 to $5,250. It's a small number, and you just said that's the 3% increase, but 250 is actually 5% increase. So are you saying 3% across the board? I'm just clarifying that, because you said that's the 3% increase across the board.
I know that the effort was to take all of the accounts that were overtime accounts and add an amount that would be representative to take care of the salary increases.
So I guess that's the question that I have, because that's not 3%, that's 5%, and you just said it was a universal number that you're trying to go across. So you're saying at every line item it might be different, because I'm just trying to understand that, because again, this comes down to finances and it comes down to you're a CFO. So is there a universal rule for that, or is that just something that you're?
I think there was a universal move across the spreadsheet that had all of those overtime accounts to apply a percentage to have it keep pace with overtime. I understand the 3% in the case of the 5,000 doesn't equal $250. I don't have an answer for that one.
Yeah, 3% is 150. So I was just curious
Okay.
to know, like, so as I'm looking at this, do I need to, I need to do the math on each one of them, and some of them might be 1%, and some of them might be 3%, some might be 5%.
Let me find out.
Okay, that would be great. And the last question that I have is just, I understand the interagency compensation, and it's a line item and it's a carryover, it's direct carry. How do you keep track of that number to make sure, like, you know, the hours that you're doing? And if you don't use the amount of time that's put into that budget, or you use more, will the college pay you more? Or if you don't, will you reimburse the college? I'm just curious about that.
I know that the work that's planning to be done will be done mostly nights and weekends. I know that occasionally, because of people's availability, there may be meetings during the day, and we'll make an allowance for that. But the actual process of billing and tracking, or how that's done, that would be between the college and the individuals doing the work for them. I'm not privy to that.
And is it, so just out of curiosity, so if you're having like a financial analyst review something from the college, is it a city, how is the hour set so because it's kind of a consulting job that the city's doing? I'm not by any means saying that you shouldn't be helping the college, I'm just trying to understand that line if you could.
I don't believe it's based on an hourly amount, so it's not like we're going to keep track of your hours and pay you X amount. I think it was a commitment that the college was making for the year to keep the flow of information that they were getting. They didn't want it to stop. They wanted new data analyzed and new programs looked at. And the information that they had gotten in that troublesome period, they loved it, and they wanted it to stop. But I don't know more of the specifics other than that they wanted to commit to not have that trail of information stop, and the 20,000 was amenable to the college to keep it going.
I guess the reason, again, I'm not opposed to it, I'm just trying to understand it, because when you're saying it's $20,000 is coming from the college and people are doing weekends, are the people who are doing the weekend work, are they getting compensated for doing weekend work?
Yeah, I can't give you more information than
It just seems a little odd, because we're putting money into our budget from the college and we're not.
well, it's budget neutral. It's not something that'll affect the general fund of the city of Quincy.
I understand what you're saying,
It won't
because it's
affect the
specific
tax
to the college and it's being funded by the college, but I'm just trying to understand how it's being used. Is it something that you know, Chris? No, you wouldn't know? $20,000 coming in from the college, budget neutral, not something that we're using, but it's being expended from our city employees working on it. I'm trying to understand that.
And my main concern was that it be accounted for. Like, how do we account for
I
it
understand.
correctly? At one point, we thought,
Well, you're
well,
accounting for it by putting in the line item, but I'm asking for you, how are you actually accounting for it to be expended through the work that you're doing? Do you understand? Is my question clear?
I'm not sure of the question. I'm sorry, Counselor.
So there's $20,000 that's in the budget, that's budget neutral, $20,000 coming from another agency, Quincy College, put into our budget so that the Quincy Municipal Finance can do projects for the college to help get them through a difficult time.
well, it
correct?
wouldn't be finance doing it. It would be some personnel in finance working directly with the college.
So some personnel in finance doing work for the college. I'm imagining that we're keeping track of the person's hours to actually expend, because it's money, it's like a consulting fee. They're paying Quincy $20,000 as a consulting fee. How are we keeping track of how that money's being expended, so that we either, if we don't spend it, do we reimburse it to the college, or if we go over $20,000, is there a way that we can flag it that we went over $20,000 and need more? Is that clear?
I didn't hear what Councilor Mahoney said, but I think the question is, where's the revenue going to come back to replenish this
The
20,000?
revenue comes from the college.
So where's that going to come through, I guess, specifically?
That comes through the normal process. I mean, that they pay us, right?
They could transfer it, they could send a check.
Yeah.
No, I understand they're transferring the percentage, but I guess how do we determine what our hourly rate is that we're charging them to be able to do the project for them? They're
Well,
giving us $20,000, it's budget neutral, people are going to be working on it. How do we come up with $20,000? And if you do 10 hours of work and you charge X amount of money, If you charge, $100, that's $1,000 worth of hours. When you extend it past $20,000, do we charge the college more? Or if we don't spend that money, do we give the college back money? It's a simple question.
Yeah, my inclination is to leave it between the college and the individual. I didn't want to get into managing what projects
line
were being
item.
done for the college and how much time. I'm not following that.
So if this is a pass-through of $20,000 that's coming out of the city's budget here, right, for 2020, where's that revenue coming back in as the offset?
The
And
college.
you're asking about measurement of, how.
I'm
I
asking
guess
for
how
both. I'm
they-
asking
How
about-
this engagement is structured.
Yeah.
But, I think the general question is, how's this money come back to make it budget neutral?
Right.
It is budget neutral.
No, I think we understand that part. How is it budget neutral?
It will come in through miscellaneous recurring revenue, and it will be applied to a payroll line in finance when the individual is paid money from it.
Okay.
No cost to the city.
Okay. There's no tracking mechanism. I would just, before you actually set something like that up, you usually set up a tracking mechanism for it, but that's fine. Thank you very much.
Okay. So, Councilor McCarthy, motion to approve. All those in favor? Those opposed? Ayes have it. Next, reserve fund.
The reserve funds are level funded at an appropriation of $250,000 each. Stabilization will go from
Motion
11
to
million.
approve by Councilor Hughes. All those in favor? On the motion, Councilor Kroll.
Chairman Kane, excuse me, Mr. Kane, Chairman Kane. Good evening, Mark, how are you? It's my microphone, right? I feel like I'm pretty close to you. Thank you for all that you do, you and your department. I will say you're always accessible, which I know, is important to me, particularly when we have, more of these financial type conversations. I want to just kind of take a step back because I feel like, you're covering a lot in these 4 or 5, maybe 6 items that you're speaking about. And at some point in the conversation, this body will contemplate whether or not we decide that creating essentially an account for the downtown is a good idea in the context it's presented. I know you and I have spoke kind of on revenues, and when you kind of pull money out of the general fund and put it into its own fund, if everything else remained the same, you hope that your new growth coming into the coffers is greater than or equal to, so that you can kind of toe the line on taxes. So I think we're in agreement with that. This will be part of my dialogue that takes place much later on, because I know as it was presented, and this body deliberated the creation of a, sinking fund or emergency savings account for the downtown. I think what's being presented is a lot more than that, but that's kind of beyond your scope. What I was wondering, and I know that some of the members of the public had shared their comments here this evening, and it was something I was reflecting on today, actually, during my lunch hour. I was just kind of going through a couple more things. Back in 2017, your office, per really the request from the rating agencies at the time, had presented a plan to the Quincy City Council asking us to adopt financial policies.
Mm-hmm.
And I remember there was a certain level of, we need to get this done, we need to get this done, we need to get this done. I know that because I sat where Councilor Kane is now currently. And, we deliberated through it. I think I had a little cause for pause on the maybe 6 to 7.5% of the debt structure that the city could hold at any time. But, we moved forward collectively as a body. And in those financial policies, go back, I think it was 20% going to stabilize. This was all coming out of free
Correct.
cash. 20% to stabilization, 10% to inclement weather,
Inclement weather,
and 20% to OPEB.
yes.
So is the city, and there was some talk about this around free cash time this past December, is the city getting recertified this year, do we know?
The city will get recertified just prior to setting the tax rate. We still have some
So that's
transactions.
later in
related.
the fall. There was some talk about a potential free cash,
Yes.
2.0, if you will. At the time, we were talking about free cash 1.0 back in December. So 2.0 is off the table, right?
I'm not quite sure 1.0 versus 2.0.
Well, to your point,
Level of
last year we
commitment?
set the tax rate, right? Part of which was the free cash certification process. And there was some talk at the time that we may be in a position to get recertified.
Oh, yes.
Before the budget, actually, somewhere around this time.
The deadline for that is April 1st.
Okay, so, no.
We're 6 weeks beyond recertifying.
So we did get
We
recertified.
we were waiting for an additional transaction in the city to take place to go for the recertification for this year. We didn't get those funds in. It's a substantial transaction that would have had a serious impact on our free cash allocation. So we wanted to wait as long as possible, but the transaction didn't occur.
So basically, we deferred in getting
We're gonna get it later.
recertified, which if we did, it would be twice in 1 year, right?
Yes.
Arguably.
Correct.
So in terms of kind of beefing up our accounts per the financial policies, are we doing that with the free cash? Because
We're keeping track of it. We're a little bit behind because we're waiting for some transactions that haven't been executed yet. When they are executed, we'll make up the money due to the fund based on the formal policies that we adopted. So the money will all be paid to the stabilization, OPEB, and inclement weather, which we didn't put money into in the budget this year. We ended with a surplus. We also have an eye on free cash going to inclement weather fund.
Right, I mean, that's kind of separate. I mean, my mind goes to, again, when we're giving presentations, it's about the rating agencies like investments in infrastructure. Yeah, I get that. The rating agencies like investments into unfunded
They love
pensions
it.
and OPEB as well,
There's
right? And
nothing
I know,
they love more.
what's that?
There's nothing they love more.
Right, and I know it's not the sexiest thing to do. Would much rather, build a school or do some roads over and so on and so forth. But when we think about financially structuring the city for, the next generation, I think it's
Right.
imperative. So when you say transactions waiting to settle, I'm just trying to wrap my brain around. Since we passed these financial policies, have we been putting money into those funds?
Yes, we have.
Have we?
We've been putting free cash in there. Actually, 50% of what we receive is the obligation. We haven't taken our eyes off that obligation, but we are behind in making the payments. We have other attractions that jump ahead of that, that had we done them, such as the patrolman's reimbursed retroactive pay, we would have put it into the stabilization fund and had to turn around and get a 2/3 vote from the council to actually pay the patrolman. So we held the free cash to pay the patrolman, which I believe they just received in the second week in May. I think that total is about 3.1 million.
So does that all line up, Madam Auditor? The dialogue, I mean, I know you actually have the numbers, but I'm only asking because I remember the high level of, expediency that was being presented at the time to this
We got
council.
credit
of, You
for it.
need to adopt this, you need to adopt this, oh, by the way, you need to adopt this. So,
They appreciated that it was adopted, and when we're on calls with them twice a year, we go through these types of transactions, what's happened, what hasn't, what will. So all of this gets discussed, and they're aware of it, but
so they're aware that currently we did not make the payment from free cash
yes,
that we adopted per the financial policies
that we will.
by year end?
If the transaction takes place, we'll get it certified before the tax rate recap in the fall, and we can make it then. We're too late for April 15th, so we won't get a new free cash certification by June 30th, but we could get a new free cash certification in, say, early September.
But if we did it at year end, it would be for the calendar year end, whereas we would have missed last calendar year end.
That's correct, but the information would still pass to the rating agencies. We could pass it to them the day we did it, so that
So
they're aware.
basically, in a best case scenario, we missed last year.
Yes, we missed this year.
This
219.
fiscal year,
Fiscal
correct? The
219.
last calendar
I
year.
talk fiscal years.
Right, I do too, but I'll go to calendar year if need be. So apparently, we're off the mark last year, long story short.
Yeah, we had other priorities before following through with the deposit to stabilization because we would have had to have turned around and taken it right out. There wouldn't have been a benefit because we owed the patrolman.
So I guess that's kind of a larger question, and maybe we can talk about offline, is like, it's the old adage, always pay yourself first, right? So when you get a sum of money, it's usually like, I don't know, what, anywhere from 3.5 to close to 5 million bucks, I think we get certified in free cash. I know there's competing priorities. We affectionately say free cash is not free up here. I think we use that line a lot, right? If we're not paying ourselves first, meaning adhering to the, call it 50% deferral into those three accounts, the inclement weather, the OPEB, and the stabilization, like, why are we even adopting the policies?
Well, they're not erased, they're not forgotten, they haven't gone away. We know the obligation that we owe to those funds, and
But we skipped them last year.
we'll make it. We didn't make it on time.
But we won't make them at all, right? Because when
we'll
we get
make
recertified in the fall, that will be
We'll get
for
recertified and we'll make the payments.
this year.
Right, what's owed,
But we still missed last year.
50%, yes.
Is that, Sue, is that relatively on track, like?
I believe that we've missed 2 years at moving the free cash to those different, the stabilization, the OPEB, and the inclement weather account. 2 fiscal years.
Yeah?
Well, this year's not completed yet, but yeah, it could end up being 2 misses of funding those 2 accounts.
Yeah, I guess I scratch my head and wonder and say, like, why do we even contemplate, adopting such a policy if it's not A1 priority? I don't know. I just remember, I go back to the stuff around budget time because mentally, all this stuff connects together. I mean, you know that way better than I am. This is what you do. But it's like window dressing. Looks great on the window, but doesn't keep the sun out. So I don't know.
I feel your frustration, Counselor, but I can only reiterate that the commitment is there and the commitment will be followed through with to the reserve funds.
Again, I pay enough attention to the analysts. Obviously, I'm not invited to the call. That's probably by design versus chance. But if I were them, I would say, why are you even adopting these policies? That's really what I would think. And structurally, we can talk about our debt service is this, our debt service is that, and our credit rating is this, but it's just perplexing to me, I guess.
I thought the discussion for adopting those policies a couple years ago was basically that it was window dressing in order to secure, whatever the credit rating, that we're currently at.
Well,
That's what it sounded like. It didn't sound like you just needed to have something in place in order to look good. And I'm not saying that that's right. I understand what you're saying, but I'm just trying to clarify
Well,
that. That's what the discussion seemed like to
It
me.
was specifically spelled out.
Yeah.
If you had, $10, $5 of it was going here, here, and here.
Yeah.
Like,
But
that
it's,
was-
I mean,
it was-
it's
it
not
was
a,
an earmarked
is it a
money type.
requirement or is it a policy?
No,
Well,
there's
yeah.
no enforcement faction to it.
Right, so it's window dressing.
So why do we do it?
No idea.
We got credit for it,
We get credit for it?
absolutely.
That's what it sounded like 2 years ago, too.
The dog chasing its tail. Thank you.
Yeah. There's a motion to approve. Council Palmucci.
I would just add that anytime the body adopts a policy, the body has ways in which to enforce the policy. I mean, we get to vote on the budget. We also get to vote on every expenditure out of free cash. Our votes on those two particular items can force a policy to be met. A policy objective that we were asked to adopt, that appeared well thought out, and this body supported. So there will be 2 times where we get to vote, perhaps more than 2, but there'll be at least 2 times where we get to vote where if we want that, the body as a whole wants that policy to be put into place, we have the ability to do so with our votes. That's all.
Yeah, absolutely. Actions speak much louder than words. All right, there's a motion to approve on the floor from Councilor Hughes. All those in favor? Those opposed? Ayes have it. Retirements and pensions, please.
The retirement and pension increase is 6.23%. It comes out to $1,744,241. That's a mandatory calculation performed by the Public Employee Retirement Administration Commission, PIRAC. They send us that every year. We usually verify, and that's the stated amount. So that's the increase for the fund this year.
Motion to approve on the floor. Council Hughes, all those in favor? Those opposed? Ayes have it. Unemployment compensation.
Unemployment compensation with the unemployment rate well below 4% decreases $50,000 this year, and we'll go from the line from $150,000 down to
Motion to approve
$100,000.
on the floor. Councilor Hughes, all those in favor? Those opposed? Ayes have it. Medicare.
Medicare has increased 3% to keep pace with salaries and wages, $77,629.
Motion to approve, Councilor Harris on the floor. All those in favor? Those opposed? Ayes have it. Furnace Brook Golf Course.
Furnace Brook Golf Course has increased $8,533 to keep pace with the anticipated obligation per the lease.
Councilor Mahoney.
I just have a quick question for this. So could you just tell me what is the current expense? What does that stand for this $179,000 for Furnace Brook Parkway, Furnace Brook Golf Course?
It's the property taxes due on the Furnace Brook Golf Course.
And when does the lease come due on?
I believe the 50-year lease is up in 2021, I believe.
And what is the city's plan and how are we going about to handle that? And is that something that the council could get a presentation on? Because this is something that it's coming up relatively quickly, and there's a lot of people who are interested in knowing the direction that the city's going to be taking in that, and
Thanks,
probably including
Councilor.
many of us.
In Ward 3, this is an issue that we pay very close attention to.
Yep.
We've had numerous meetings on the
No, I
subject.
know you have.
None of which you've been present. And we're currently in discussions for the first initial stages for what's going to be planned for the golf course. I know there's neighborly interest, the club itself has interest, so there's many independent parties that care to see what's going on. I'm happy to follow up with you about that offline, and maybe we can schedule a meeting with the mayor's office just to discuss further.
Or maybe we could do a presentation right here in the council chambers for that, so that everybody in the city can learn, that those that are not privy to be able to, or have the time to attend.
There's no plan, so if you have any bright ideas at this point, we're welcome to bring them up.
To be so catty, but thank you.
Just
No
suggesting.
pun intended.
Just intended.
No pun
Yeah.
intended.
Do you have any more comments?
No.
Okay. Councilor Harris? Motion to approve on the floor. All those in favor? Those opposed? Non-contributory pension.
We have one living soul who's in her mid-90s who comes under the state mandated COLA adjustment, $298. God bless her.
Motion to approve from Councilor Hughes. All those in favor? Those opposed? Ayes have it. Thank you.
Thank you, gentlemen and ladies.
Colleen Healy. Next up for bids. Hi, Colleen.
Hi, how
How are you?
Good evening, councilors. Before we begin, I'd like to thank each of you for your continued support, not only during the budget time, but throughout the course of the year. This board has had the opportunity to work with each of you, and we thank you for your hard work and collaboration. Together, we strive to strengthen customer support and increase public satisfaction of fair taxation in the Assessors Department. This council has supported us with the funding needed to streamline workflow and procedures, and the money appropriated for this fiscal year was invested in technology, data collection, and further enhancing our consumer website to deliver a better taxpayer experience. We've also dedicated time and effort to further enhancing the education and training of staff in the assessment field. The assessors are responsible for the valuation of 27,000 parcels of real estate, whether residential, commercial, industrial, or personal property. In addition, the department is responsible for administering over 74,000 bills for motor vehicle excise and boat excise. This department oversees all state property tax exemptions, for example, disabled veterans, blinds, and tax deferrals. This year alone, we processed over 1,800 applications. The assessors each year schedule the revaluation process to comply with the laws of the Commonwealth and to achieve a steady tax base for future fiscal planning. This requires months of prep work to be prepared to comply with the audit conducted by the Department of Revenue. As a reminder to this body, the Assessors Department generates 75% of the total revenue for the city. The Assessor's Office is constantly in discussion with and in service to the public, working daily with the inquiries and concerns of our taxpayers, planners, developers, builders, and real estate professionals. This department is responsible for preparing cases for hearings and defending the fairness of the city's property values before the Massachusetts Appellate Tax Board. Preparing for cases can involve hiring an appraiser to perform an outside appraisal on the subject property, in addition to the many hours spent in preparation for the hearing. Over the past year, we have significantly reduced the amount of pending appeals the city has before the Appellate Tax Board. Resolving appeals pending reduces potential tax liability for the city. We continue to improve lines of communication and taxpayer awareness regarding the importance of accurate property data by cyclical property inspections. We created a dedicated consumer webpage for educational and scheduling purposes, which allowed us to accommodate taxpayer schedules and significantly increase our response and turnaround time. Taxpayers are now able to view our online deployment map, showing areas and dates we would be out in the field, and were able to see a photo and description of the data collector. We had numerous taxpayers call to thank us as the process was transparent and accommodating to their schedules. They were also very impressed with the software. We have increased data quality through higher levels of auditing and the introductions of new data collection through mobile tablets and data entry technology. Accurate property data is the basis for ensuring property values are fair and equitable. Continuing to advance technology in our daily workflow is crucial as the city continues to see a positive climate for growth and new investment. We've experienced a tremendous amount of new growth with additional developments in the pipeline. Quincy ranked 6th in total new growth out of 351 municipalities this past fiscal 19. The communities above us being Boston, Cambridge, Newton, Somerville, and Everett. Quincy also competes in other areas as we've ranked top 10 in the state in nearly all evaluation categories. So I respectfully request to each of you, when reading through the Assessors Department budget, you kindly remember this department is responsible for 75% of the total revenue for the city. Thank you.
Motion to approve on the floor, Council Harris. All those in favor? On the motion? Who had their hand up first? Okay, Council DeBona.
Thank you, Mr. Chairman. Colleen, thank you for coming in tonight. I know over 2019's budget, or 2018, we were 4th on the commercial on new growth. We're at 6 this year. Do you have that amount for new growth? I think we were roughly 3.9 million last time around. Do you know how much we were this year?
So for fiscal year 19, that's
Yep.
the new growth, figure I'm giving. We rank 6th in total new growth.
Total new growth.
Correct, out of 351 municipalities. That would be combined residential and commercial.
Residential and commercial, okay.
Correct, yes. I can give you, I don't have that data in front of me, but I
Okay.
could tell you, where we ranked, just looking at it from a commercial perspective in relation to the other communities. I can easily give you that
Sure.
calculation.
Boston, Newton, Somerville, Everett, and I think you said, what were the other two? We were 6, so there's one more.
Boston, Cambridge, Newton, Somerville, and Everett.
Okay, it's Cambridge, okay. So Everett must have come in front of us, because I don't remember them being
Correct,
online.
yes.
Okay,
Yep.
all right, and I think maybe Newton or Somerville was one of those other two. But anyways, just a long story short is, that this is probably the number one question out there with our new growth, our new commercial base, our new units coming on board is, are we getting any benefits from the taxpayers on the back end somehow or another? And if we're ranking up here out of 351 communities, we're at 6 and we were at 4th last year, so we're up there.
Correct.
We're doing a great job, and it's just, it's hard to articulate it to the taxpayers of the city, especially when we're in an election year, you go knocking on their door, and they look at, total money that they're gonna have to pay more, and their house values are obviously. Where are we up for house values? Do you know where we're kind of at? I know we're at 469,000 is the average household amount. Are we,
Correct, and that was for fiscal year 19. So right now, what's happening is we're in the process of analyzing the sales that occurred during calendar year 18 that would be reflective for fiscal year 20. So, right now, we're in the process of doing our sales analysis.
okay, okay. Do you have a kind of an idea of what new apartment buildings / condominium units that are kind of like 50 or above, which ones new came on board?
So for fiscal year 20, which begins July 1.
Yep.
Which would be the new growth that you're referring to, it's based on an assessment date of June 30th. So
June 30th,
this
okay.
coming June. So I'm unable to give, an estimate in terms of where our new growth is going to be for fiscal year 20 because we haven't got to that assessment date yet. The assessment date, comes June 30th. At that time, we send out a request it's an AIA document that we request that all of the new developments provide us that documentation, which states the costs they've spent on the project as of the assessment date. And at this time, too, we're going out on all of the permits, which is new growth. So it wouldn't be until the end of July, August, where we would have, an estimate, of what fiscal year 20's new growth would be. Not to mention, all the way up until when the new growth is certified, we're being audited by the Department of Revenue, and that new growth number may change.
Are you going to also reassess some of the buildings with value?
Correct. So every year, property values are recertified.
And this is also goes for the buildings for apartments or slash
Everything,
everybody?
correct.
Okay.
Yes. Every year, we go through an audit with the Department of Revenue, and every year, the values are recertified.
The reason why I ask this is because as we were going online, we're getting more and more units are coming on board. And we really want to get and dip into that tax base right there. And obviously, it has to be, you have to have a dweller in there. Is that correct? Is that how it works? You have to actually fill the occupancy of these apartment
So
buildings?
it's based on the percent complete as of June 30th. So if any of these new developments, based on June 30th, whatever is completed as of that date, that's what will be billed for fiscal year 20.
Okay.
And then obviously, if a certificate of occupancy is issued for a project, well, then we know that the project is since complete.
Okay. Thank you. I just wanted to get that information for the viewers that are thinking about all this new growth and what are we doing with it. Obviously, we have a $14.3 million increase this year. We have to we have to absorb it with obviously your department with the new values of these apartments, condos, housing, commercial. So thank you so much.
You're welcome.
Thank
Thank you.
Councilor Yang.
Mr. Chairman, hi, Colleen.
Hi, Nina. How are you?
I'm good. How are you?
Good.
So not to dismiss, Mark's answer of this earlier about the 38D penalties, but was that accurate? So it's on, these penalties reflect the property owners having to file the revenue on their properties by a certain date, and then if they don't meet that deadline, then that's where this number comes in, correct?
So ultimately, the purpose of the fee is to get, property owners over 4 units to basically comply to give us the income and expense, for their property. Which what happens is all the income and expense returns come in. They're coming under Chapter 38, Section D, which these income and expense forms that come in are confidential. They're not available to the public, and that data is entered into our database, and we extract that data and analyze the data to determine market rents, vacancies, expenses, and so forth. So the purpose of that fee is to, incentivize that the taxpayer complies to give us the documentation. However, it is their right under the law if they choose to not do so.
Okay, so if they choose not to do it, then how have we find them in the past?
So that fee has not been levied to the tax bill in probably 3 years. I could get you the exact year we stopped using that fee, but the purpose of that fee was to get them to comply and give the data. We've been forthcoming in terms of getting the information out there, really, doing second and third reminders to these property owners. We have like a 73%, income and expense return ratio, which is very high.
That's great. And, that's, I think, one of the reasons, like your explanation of that just now is one of the reasons why I'm such a fan of you and your department. And I think I say this to you every year, but I have to reiterate it. I mean, it's, the work that you guys do and the way that you put this information out there to folks to be able to read through this and comb through it and understand it in such a way is really commendable. And I never have to ask you for, translated documents of what you guys put out there. You're very transparent in how you operate in that process. You're very engaging with everyone in the community. And even a question like this, like I said, the way that you just respond and sort of educate, folks, myself included, on this process is really helpful and really informative. And so I appreciate it, as always. You guys do a phenomenal job. And thank you for helping me to understand this line item. I
Thank you.
appreciate it.
Thanks.
Sorry, I didn't see my hand up. Hi, Colleen.
Hi, how are you?
How are you? So I just had a quick question, and it's really just about appeals. What's the average number of appeals that we have for the city for taxes, and any of them in our larger bases, units?
Sure. So what happens is when the property owner gets their third quarter tax bill, if they feel that their property value is overassessed, they have their right to file an abatement with the Board of Assessors. When they're filing the abatement with the Board of Assessors, the burden of proof is on the taxpayer to prove that the value we've established for their property is too high based on comparable sales that would have occurred during the calendar year reflective of the assessment date. So they would file the abatement application with us, provide their documentation, and then the board has 3 months to answer their application. If they, don't feel that the decision the board determined was fair, they have their right to then file with the appellate tax board in town. And at that point, then the appellate tax board always likes that the local board has again talked with the taxpayer and tried to resolve any differences leading up to the hearing. But there are times where there is nothing is resolved, and we do go in town then to the appellate tax board. It's just a higher level of trying their value.
Okay. Could you then tell us what the status of the Fox Rock appeal is to the tax base for the property taxes owned at Quincy Medical Center?
We are in the process of finalizing negotiations.
So is it that they don't want to pay their taxes, the appropriate taxes? So they're appealing their taxes, saying that they think it's too high.
Mr. Chairman,
Yep.
through you, Mr. Chairman, I apologize. I do not believe the administration should be answering questions at this point relative to an ongoing settlement negotiation. We wouldn't want to penalize the city's position in any way. This is an ongoing process, and I would just suggest that line of questioning probably is not appropriate for a budget setting. Thank you.
Thank you.
No problem.
Councilor Palmucci.
As a follow-up to that, Mr. Chair, just through you to the mayor's representative. So without getting into any of that, it's still legal. I was going to call it mumbo jumbo, but that's kind of not good for a lawyer to be saying, right? So legal issues and negotiations, so I get that you don't want to talk about it, but as the Quincy Medical Center site's been tied into, in an unrelated matter, the LDA, will we have an answer to that before the council's expected to vote on the LDA, knowing what the property
Sure, Councilor. And I don't,
value is
no,
and property
sure.
taxes?
And I don't mean to suggest, and I apologize if I was abrupt in any way, to suggest that the council's not entitled to any information. You're entitled
No,
to
I
any and
understand
all
that. At a public meeting, you want-
information. I was a little bit leery of going down that road at this point, but if Councilor Mahoney, yourself, any other councilors have any questions relative to that process, we'll be happy to provide those answers offline, or figure out what those questions may be and which ones may be appropriate to answer in a public setting. We just, at this point, I just don't know.
I'm fine with
and so
that. No problem with that. Do you anticipate that we would know that issue relative to the appeal would be finalized before the council votes on the LDA?
I don't know.
Okay.
I can get an answer for that, though.
All right, great. Thank you. Thank you, Mr. Chairman.
Councilor Harris, motion to approve. All those in favor? Aye. Those opposed? Ayes have it. Thank you, Colleen.
Thank you.
Deb Coughlin, please. Treasurer Collector's budget.
Good evening, Mr. Chairman, councilors. Okay, I think you'll see on page 15, the treasurer collector's budget really has no changes except for what's related to personal services and due to, the contractual agreements for the raises. Everything else has been held flat.
Motion to approve on the floor, Council Harris. All those in favor? Those opposed? Ayes have it. Tax title, please.
Tax title is, we've kept that pretty flat too, and the expenses there do vary from year to year. It depends on some of the additional tax collection activities we may choose to employ. We charge the filing fees at the Registry of Deeds for new tax titles, redemptions go there. The advertisements we have to do for the, for
Motion to
any
approve on the
tax
floor,
title.
Councilor McCarthy. All those in favor? Those opposed? Ayes have it. Long-term debt. Is this with the? Okay. Oh, short-term debt is the one with the adjustment. Yeah, okay.
Okay, so on the long-term debt, I think you're all familiar with the various projects that we used to build this number. I just want to mention that the 2019 budget included the DIF, which is going to be looked at differently this year. So if I back that out of 19, fiscal year 19's numbers, we show an increase of about $979,000. That is primarily due to, on the school side, we had some old bonds in which the debt was retired, and then we've added some additional, like the CIP for the schools that was bonded in September of last year. And on the city side, we had some old debt that is as we pay it down, as it's amortized, it's a little bit lower. And that's offset by some of the newer bonds that we did on the city side, which was primarily CIP and a small portion of the parks improvements. So it's just a function of adding new projects and the related debt, and then the retiring debt on older projects.
Motion to approve on the floor, Councilor Harris. All those in favor? Those opposed? Ayes have it. Short-term debt. Everyone should be in receipt of a memo from Ms. Coughlin noting a change in the line item for the 2020 fiscal year short-term debt. It's adjusted by, adjusted by $288,858, which should be included in the sewer water enterprise budget. So the actual amount here is $3,322,865. We'll need to accept that in the form of a friendly amendment on top of the motion to approve with the amended changes. On the motion, Councilor DeBona.
I don't know if it's pertaining to that, Mr. Chairman, or just the overall short-term debt, which is basically interest only. Just to talk a little bit about, and I overlap it with the long-term debt, is we're up about roughly $800,000 from last year, budgeted.
If you back out the diff,
Yep,
it's about 900,000.
900,000, okay.
Yes.
So, and then back it up from 2018, it looks like it's probably an increase of 2.6.
Okay, I did not restate the 18. I'm
Okay,
sorry.
that's okay.
I'm not
Just the only reason why I asked, Deb, is just a little bit about foreseeing the future. How many do you project that are in, like, I know these are either 1 or 2 or 3 year short-term debt is going to move over to long-term debt? Do you see a correlation of how much, maybe a half of it, maybe a quarter of it?
Well, some of the newer projects, that will be renewed again next year, and it would be included, and that was about 1.1 million of an
Okay.
increase this year. But as far as what's being retired, it's like a 214,000 that came out of, the budget versus last year because we bonded some of the CIP projects in
Yep.
September. So that comes down. I would have to look at the upcoming projects.
Okay.
To see, I'm just trying to think what may be bonded. And I don't have that schedule, I'm
Sure.
sorry.
The reason why I ask
I'll
is
get back to you.
just an overall assessment of what's projecting for the future, and we're looking at probably three major things. If the DIF comes through with the DIF, I think it's like 61 million, then we have Public Safety Headquarters,
Correct.
and then we have seawall, new seawalls, which is not repairs, but actually newly assessed. You could be looking at roughly $160, $170 million coming through in the next year to 2 years. Are we able to absorb, moving some of this interest only over to long-term debt, and then these will probably all be on a short-term 1 to 3 year interest only? Is that what usually happens?
Yes, and, as part of the debt analysis, I know municipal finance, when they're doing the CIP and forecasting the next few years, they're looking at the overall debt number.
Sure.
And, keeping it within those parameters that are, consistent with what our budget usually has for debt. So we're looking at all of those pieces as we're adding these projects. We're looking, what can we afford? Even, if we look at it in total, because obviously on the long-term side, we have older debt that is being, it's being paid off. And
Sure,
so-
coming offline then. Yep,
Exactly.
right.
Exactly. So that debt service will be over. So, I think if you look at the two pieces together, we're staying within that 6% percentage of budget going forward.
Because some of the three major things that could happen within the next year or two are items that we really, we call it needs and wants. Those are pretty much needs, in my opinion. The Public Safety Headquarters, the seawall repairs. I mean, I hope we can somehow, tailor in, federal and state funding as well as other grants and tailor it in with those big amounts off of obviously the DIF with paying from the downtown improvements that we're getting. But these are things we need to forecast and start thinking about now. I mean, we're looking at short-term debt, we're looking at long-term debt. Can we fit it in? Are we roughly at about 6%? Is that where we're kind of at right now?
Right. Yeah, I think we're at
6%?
Is it 6?
About 6%, okay.
6. And all the modeling that goes on going forward is looking at that. Well, what is the impact? What's coming off?
Sure.
What are we adding on? What is the impact?
Do you foresee some things coming offline on the long-term debt side in the next 2 to 3 years, coming
Yes.
right off?
Yes, there's
From
some
other
older-
administrations or other things that had happened
There's
over 20,
older
30?
debt, like, for example, this year, there were some old, I know I wrote it, yeah. There were some older bonds that we paid off. Just trying to think where I had it, sorry. Too many notes. Like on the school side, we had some old school projects, and that was about $800,000 that came off the budget.
So basically through our MSBA program, when we're getting reimbursed, does that go back into paying off any of this? Does that have anything to do with it?
Well, no, these were like bonds from 2005.
2005, okay.
But with the MSBA, the refunds we get from the MSBA, that decreases the amount that we actually borrow.
Borrow, okay,
Yes.
okay.
Yes, so we don't, even though what's presented to you is the appropriation for the full amount of the project, we have, the MSBA funding source decreases what we actually bond and that we have the debt service on.
Where are we kind of at for Southwest Middle School, the new Sterling Middle School? Are we getting any reimbursement yet, or is it has to open?
No,
school.
we've been getting reimbursements all along the way.
Okay.
There are certain, the project manager for that school handles that and works
Okay.
with the municipal finance office to get the filings into the MSBA, they approve it, or, they review it, and then we get the funds in.
You just talking to Colleen Healy that was in the assessor's office and talking about our new growth, and this all kind of ties in with what you're doing in your department with long-term, short-term debt. We're going to need these receivables, these free cash, to help out with some of these debt obligations that we're going to have foreseeing in the next year to 2 years that we have coming in front of us. The city council is going to be in front of some big items. So I'm looking forward to obviously just making sure that we're kind of looking into this and foreseeing if we have enough, and obviously, things that come offline help us out a lot.
Right, and the modeling takes that into consideration. It's looking at, as I said, we have a whole schedule, what will be coming off each year, where is that savings, what is coming on at various times, and what will that expense be, and does it keep us within that 6% range?
I
So
think
that's
you-
all
yep.
being done.
I think you made a major point when you said we have some stuff from 2005 that is coming offline.
Correct.
And sometimes people don't fully understand that there's things that are coming offline to allow us, to give us some leverage on putting some new stuff in the pipeline. So some come off, some come on, and some go short-term, mostly interest only, and then we move it over to long-term. Now, has Mark, I don't know of yourself, have you guys combined any loans and put it into, like, combining loans because of the interest rates being good? Do you do any of that?
No, what, the city's, Hilltop, the city's financial
Okay.
advisor, they look and see if there's certain situations when we can, it may be advantageous for us to refund a bond, and
Yep.
certain bonds are eligible for that.
Okay.
And they're doing that analysis, and they let us know, and in that case, we would pursue it.
Okay. Thank you so much. I just wanted to project how we're going to be in the future. Thank you. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Good evening, Deb. How are you? Nice to see you always. And I've had several positive interactions working with your staff, whether it's been paying my excise tax bill or whatever.
That's good
But
to hear. It's not always a pleasant experience paying a tax, but as long as.
that's, and credit where credit's due, they're very accommodating. And I just think it is. It's important to take a moment and note that we have some quality employees in the city of Quincy. And I know, probably to your point, some of the customer service issues they deal with are, we'll call it challenging, maybe, to be, polite. But yeah, it's not an easy job. So I've had a wonderful experience. I just wanted to pass that along.
I'll be happy to pass that along to the staff. Thank you.
Please, and you've always, throughout the years, been a pleasure to deal with as well.
Thank you.
I'm just contemplating again because I feel like there's multiple tracks running on this budget and multiple conversations that do overlap one another. So I know you said it, or it's been said here. You didn't necessarily say it's been said here tonight, and I think Councilor DeBona touched on it a little bit as well. We're going to be contemplating essentially a operating account within the DIF. So that's going to pull some money out of short-term debt, right?
Correct.
And put it in its own account. But this is a proposed policy. It's not reality yet. We haven't got to that stage of the budget conversation. So I guess my question is, and just hypothetically playing this out, because I know when we were talking about it, we were talking more about the emergency savings fund, right? Having any excess revenue go into an emergency savings account. Now I know the proposition is much more than that. Either way, the analysis that will take place at the city council in the last budget hearing will essentially authorize this to go forward or not. And if it didn't go forward, then that money would have to come, basically the downtown incremental financing that we're on the hook for would come back into the short-term debt obligation account, correct? If it didn't become its own enterprise account, for lack of a better word.
Well, for one thing, it was in there in the past, and we've been transferring that at the end of the year when the analysis is done for the revenue associated with the DIF. We've been moving that over anyway, so I can't address what you're going to have to rule on that, but I think we're covered by the revenues in the DIF, just based on the analysis that has been completed.
Oh, no, I absolutely, I guess just
Okay.
the accounts payable would change, right? The account that the money's coming out of
Correct.
would hypothetically change, or lack thereof. Right now, it's pulled out and sitting in an operational account, the DIF account, that's before the city council for consideration, right? But
Correct.
let's just say hypothetically reverted back to the way that it was. Is that going to change anything that we take action on here this evening? Or said another way, would you have to come back with a memo of sorts, like been presented here this evening, showing a different number?
I don't know. I don't know at that point. I'm going to defer to Mr. Walker.
Hi, Mr. Walker.
Through you, Mr. Chairman.
Nice to see you.
Mr. President, how are you? My initial thought on that, and I appreciate the consideration to answer this on behalf of the treasurer. This is sort of a policy question that you wouldn't necessarily be
Yeah,
in-
no,
involved in.
absolutely. I'm just trying to figure how it all
I think
kind of
the
comes
the
together.
suggestion you raise is a possibility where we would, if hypothetically, although we certainly hope that's not the case, that it was the council's desire to not go forward with the proposal as the mayor has put it together relative to the downtown division, that we could amend the short-term debt budget prior to the final council vote to make sure that we have that necessary appropriation to pay that. The other thing we could do, and I talked a little bit about this with Auditor O'Connor today as well, relative to the potential of, if it's the council's desire, and again, I hope it's not the council's desire, to not go forward on some of the operational proposals that the mayor's put in there, is to just approve or cut everything but the debt service lines out of that proposed downtown division. You would essentially achieve the same purpose from a practical and from an appropriation standpoint.
But you see my line of questioning,
I do.
because although it's not connected, it is connected, and I know this is, phase 3, and we're in phase 1 of the conversation, but it's just the way my mind sort of puts things together, for lack of a better word. So thank you for that, and sorry if that question wasn't really, to be properly submitted before you. I'd also ask maybe, Mr. Chairman, if, because I know that there was a bit of dialogue 2 years ago with Powers and Sullivan, our independent auditor, right? Is that there? Yes. Yeah. If maybe you could interact with him and get some sort of his thoughts on what's being proposed for the diff account, that'd be great. So thank you. Appreciate it. Thanks, Deb.
Thank you.
Okay, Councilor Harris, motion to approve. All those in favor? Those opposed? Ayes have it. Thanks, Deb.
Very much.
Kathleen Logan, please. Motion to approve. All those in favor? Those opposed? Ayes have it. Thanks, Kathleen.
Okay.
City Clerk, Nicole Crispo.
Hello, good evening, Mr. Chairman and City Council. I have provided you all a packet to reflect the Manning chart, the year-to-date revenues, and the election calendar for 2019 and the first part of 2020. My budget is on page 25, and it starts with the city clerks, which is level-funded employee union contract obligations. We are up, our revenue is up $10,000 from last year. At the window, I think that's probably to the requirement for the real ID. And our 2018 dog licenses were up the most ever, 3,109 licenses.
Great. Motion to approve. On the motion, Council Crowell.
Hi, Madam Clerk, Nicole. Nice to see you. I just want to pass along too, because I know can be a challenging job, but actually received a pretty glowing experience from one of my constituents now going to be doing business as Jersey Mike's, who worked with Susan in your office.
Yes.
And he could, and this is his first interaction in the city of Quincy, could not have said any of nicer stuff of just the overall experience working with Susan and your department as a whole. So it's nice to know that when an individual is opening up a business and, they're coming, to deal with your staff, that, the positive feedback that I'm receiving or had received from them was top notch. So again, kind of
Thank you, and I'll be sure to pass that on as well.
Yeah, thanks.
All right, motion on the floor from Councilor Harris. All those in favor? Those opposed? Ayes have it. Elections.
Elections is level-funded employee union contract obligations, 2019, 2020.
Motion to approve on the floor, Councilor Harris. All those in favor? Those opposed? Ayes have it. Licensing Board.
Licensing Board, again, level-funded employee union contract.
Motion to approve on the floor from Counselor Harris. All those in favor? Those opposed? Ayes have it. And census.
So, as you know, we're coming up on the 2020 federal census, and we're making an all-out effort to get our city over 100,000 people.
Motion to approve on the floor from Counselor Harris. All those in favor? Those opposed? Ayes have it. Good luck.
Thank you.
Thank you. Jim Timmons. Legal Department.
Evening, Mr. Chairman, members of the committee. I can't match Mrs. Logan's radiant smile, but I'd like to follow her
She didn't even get a
approach.
chance to smile.
I'm happy to answer any questions. Are you beginning on page 19 with the department?
Motion to approve on the floor from Counselor Harris. All those in favor? Those opposed? Ayes have it. Workers' compensation. Motion to approve on the floor from Counselor Harris. All those in favor? Those opposed? The ayes have it. Court judgments. Motion to approve on the floor from Counselor Harris. All those in favor? Those opposed? The ayes have it. Thank you very much.
Thank you, Mr. Chairman.
All right.
Thank you. Thank you.
See, you shouldn't have said anything. Patty McGowan, Human Resources, please.
Good evening,
are you?
Councilors. I'm happy to be here tonight to present the fiscal year 20 Human Resources and Health Insurance budgets. In terms of the fiscal year 20 Human Resources budget, the budget for personal services, contractual, and current expenses is $484,411, which is an increase of approximately $27,000 from last year. In terms of personal
Motion to approve on the floor from Counselor McCarthy. On the motion,
I just have a quick question. I'm not sure if you were here earlier when Mark, the CFO was here. He was saying that, that there are certain levels that you're trying to create throughout the city for positions, like financial analysts might have gone up 3%, certainly salary roles, managerial roles. And what I was asking for is that if there's a way that we could have, I'm sure Human Resources is working with him on that, to make sure that as we're establishing that, there's certain criteria that go along with that for what the levels are and how you can establish yourself at that level, so we can have a better understanding of that. So then when the budget's created, if we're increasing somebody's salary, we understand what the position has changed to and what the expectations are for that. So if you could just let me know where you stand on that and when we can anticipate getting maybe those types of information from your department.
Sure, yeah, so we're, trying to work with the departments, to try to make things more streamlined in terms of levels and job descriptions. It's always sort of been our goal is to, sort of streamline that process.
Okay.
So, just as we go through those, we will certainly keep you updated as to, what is happening with all of that.
Okay, so is there, at this time, Nicole Crispo just gave us a nice chart like this. Is there any way that we could be provided the same thing with the charts, with an idea of who's in those positions and what level or what grade they're at?
It's something definitely that we can work with and get that done.
When are you hoping, this is a tall challenge because I know it's across the city, but when is the hope or the challenge that you think you'll have that done, that you'll be able to share?
I don't really have a time frame for that yet. We're just sort of getting started on that process, and, we'll be sure to include you in all of that.
So in this particular budget that we have here today, Mark Kavanaugh said that there was a 3% raise across the board. Is that, and that there were certain people that were being leveled off? Is there any way you could share with us who those percentages, what percentages and which ones were being leveled off, like the financial role? Chief financial role. It was kind of a mention that he explained in one of his department heads that were being brought to the same level across the board. So I'm just trying to understand his commentary and then also how Human Resources are being able to match up to those finances.
Can Mr. Walker help with that?
Through you, Mr. Chairman, thank you. I think those questions are more of an administration-wide sort of perspective that you're looking for. It wouldn't just fall within Human Resources. So we're happy to provide as much detail as we possibly can on this process and provide you the information you're looking for relative to some of those questions. But it wouldn't just be in human resources. It goes beyond that. It goes to our office. It probably goes to municipal finance. There is
No,
a
that's
human
why-
resources component to it.
Yeah, that's why I was asking
yeah, I think
Mr.
I-
Kavanaugh that question.
right.
But to level set that expectation, he was saying that there were certain positions that were being done across the board. So let's just say for a financial analyst position, that might be in the finance department, that might also be in the GPAL department. It sounded like you were creating levels or steps or grades, and if that's the case, that should be something that Human Resources would get involved in because it's multiple departments. And then there's also expectations for those jobs. And if we're to approve a budget where you're making those, administrationally wise, you're making those decisions, then we should be, as a council, be able to see what those expectations are to level set that. So, thank you.
There's a motion on the floor from Councilor McCarthy. All those in favor? Those opposed? Ayes have it. Health insurance.
Okay, in terms of the health insurance budget, Medicare refunds, there's an increase of about $35,000 due to an increase in the Medicare Part B premium. Dental insurance is increasing a very small amount this year, just a little under $300. We actually had a 3% decrease in the PPO rates, and we were stabilized in the Delta Care rates. However, there was an increase of about 3.5% in our enrollment for dental insurance. Life insurance and flex spending, those items are being level funded this year. Miscellaneous employee screenings, there's
Motion to approve on the floor. Councilor Hughes. All those in favor? Those opposed? The ayes have it. Thank you very much, Patty.
Thank you.
Fire Department, Chief Cadigan.
Good evening, council members. If I may, I would like to briefly talk about the morning of March 13th, the day after the five-alarm fire that tore through the 300 block of Newport Ave. On that morning, I found myself both humbled and grateful as I watched the families return to their home, the five-story apartment building that one day earlier was only a few feet away from being consumed by fire. I was honored to witness the fruits of our fire department's hard-fought efforts as these families were able to recover their life possessions as well as their treasured family pets. This, along with no loss of life, stands as a testament as to what can be accomplished when our city stands collectively in providing their fire department with the proper tools, apparatus, training, and manpower. It goes without saying the respect and admiration I have for our firefighters, and I will always be appreciative of the selfless efforts that took place during the five-alarm fire on March 12th. I would be remiss, though, if I also didn't recognize Mayor Koch for his forward-looking vision of what is needed for our fire department to keep pace with the unprecedented growth of our city that our city is experiencing. I also want to acknowledge you, our city council, for help with needed appropriations that you have provided for our department to perform our duties in an efficient, professional, and safe manner. Lastly, I want to acknowledge the citizens of Quincy whose support with their hard-earned tax dollars makes it all possible. In closing, on behalf of the Quincy Fire Department, I want to say thank you, Mayor Koch, for your vision. Thank you, council members, for your support with fundings. And thank you, Quincy taxpayers, for helping us to serve you and your families in the manner you expect and deserve. Thank you all.
Thank you, Chief. Motion to approve. I just want to say, we said it before and we say it again, thank you very much for your service today and always, especially on March 13th. That was a terrible day in Ward 3. And, you guys did a great job in mitigating any of the potential effects that could have occurred, and same with the Quincy Police Department for that matter. So thank you very much, Chief.
You're welcome.
Motion to approve on the floor. All those in favor? Aye. Those opposed? Ayes have it.
Sincerely, thank you all.
Thank you, Chief. Jim Fatsis. Planning.
Good evening, Council. Through you, Mr. Chairman. The City of Quincy's planning budget has no staff additions except for one minor note. I've requested to formalize the student intern program, so there's an addition to my budget of $9,300. That would be coming from the general fund. That basically funds 1.5 student interns, and I've got CDBG covering the other half intern. That is pretty much straightforward on the personnel lines, other than the contractual obligations across the board. On the personal service side, you'll note that under a line that is new, which is regional compact, as many of you may know, in 2015, the Community Compact Cabinet was chaired by the Lieutenant Governor Polito, and basically that cabinet champions municipal interests across all executive secretariats and agencies and develops, in consultation with the city and towns, mutual standards and best practices for both the state and municipalities. The creation of that compact creates clear standards, expectations, and accountability. The compact is the cities of Boston, Cambridge, Chelsea, Somerville, and Braintree, and we represent the Greater Boston Regional Economic Compact, and this year they have asked each community to invest $25,000 for fiscal 2020 activities. And that would be the change in that line. And then ultimately, the rest of the lines stay the same. I will point out that contractual changes. Last year, we were before you, and we received funding for our open space plan and other plans. The Wollaston plan is central to this year. We always carry $10,000 for the Department of Environmental Protection, so the $90,000 is the same as last year. But I did want to mention that there are, if you look at your booklets, I spoke today with the auditor, and I explained to her that one $29,000 encumbrance on the wood, actually, I just received the bill finally on the planning for Wollaston, which is $29,000, so that was encumbered, leaving me with approximately $8,000 balance in that line. Beyond that, the contractual line was level funded completely across the board.
Motion to approve on the floor, Council McCarthy. On the motion, Council Yang.
And good evening.
Good evening.
I have a question about one of the line items on here. It's the communication line item. So from 2018 to 2019, we doubled that, right, from 5,000 to 10. And then for fiscal year 2020, we were looking at an increase from 10,000 to 11,500.
Yes.
But just looking in the actuals and looking at what was spent not only this year, but in the past, I mean, on average, from 16 to 19, we're only spending about 1,300 in this line item. Now, I'm a huge proponent, and you know this, we've talked about this, about increase in communication and lines of communications with folks. I'm just confused because we're doing so much work, and particularly your department is doing so much of that work by way of communicating, particularly with the downtown, right? I mean, we had you and Rob and Bill here the other day talking about how you guys are really taking the reins on that with communicating with the landlords and the tenants, right? And so I'm kind of baffled that this number is so low insofar as what we've spent to date. Given, yes, there's still 7 weeks left in the year, I get that, but even with 7 weeks left, I mean, we've only spent, again, to date, I think it's 21%. And it pains me. I wouldn't want to be the person that says, cut your resources to communicate with folks,
No.
because that's something that I advocate for, right? I guess what I'm trying to figure out is, what's going on here?
Well, much of our funding, much of the communication is funded by proponents. So if someone comes in to us and is going to propose a development, The proponent bears the cost of communications in great many cases. And in the past, a lot of our communications was being routed through the mayor's office. This year, we've looked to add constant contact and a few other forms internally. That's the reason for the spend this year. I don't anticipate that our communication line, we're communicating, and a lot of it has been in-house organic, but we feel strongly going forward, we need to outsource a bit of that. And, I've been blessed with a staff on the community development side of the house that has done a great deal of our communication work internally, Facebook postings, things of that nature. But as we move forward, we have to pick it up and go into multimedia communications, and that is largely where we see this increase and where this budget's going to go to this year.
Okay, I mean, that's news to me. I love Constant Contact. I think it's a great medium, so I'm happy to hear that you guys are going to be taking that on. Again, I'm torn because I hate to be a person that, again, demands more communication that doesn't provide you the resources to do so. I think I'm just apprehensive to see sort of what comes within the last 7 weeks. Now that have you started the Constant Contact program yet?
We've just contracted to purchase it, and that's where we're at. A great deal, as I said, we've been extremely organic in the manner in which we produced communications. We just can't do it any longer. We're pretty tasked out. That side of the house has been very helpful, and I would say that going forward, we're going to have to bear the burden of that.
No, and I appreciate your honesty around it. I mean, you're obviously addressing it, and part of addressing it is admitting that, there's an area that needs to be improved. And so, it'd be helpful to see in the closing of these 7 weeks, if you guys, are spending anything else, is sort of with foresight between now and the end of this fiscal year, and then what you're projecting you're going to be doing for your communications plan for the year 2020. That'd be really helpful to see.
Well, again, as you know, Counselor, at the last meeting, we've come up with a number of strategies as far as putting some staff downtown in one of the Galvin buildings to actually meet with the businesses and the tenants in downtown. That is covered by our funding as far as the personnel side goes, but we feel the outreach, the brochures, and some of the things we're going to go forward with are in design as we sit here. So I will tend to, you'll be copied on everything that is produced as far as within house, and will be covered under that communications line. The communications line also covers things, as we go forward, if there's notifications, public notifications, which we expect to see quite a few more this year. We actually thought we would have seen more last year, but we did not. But anticipating what we're going to need, again, it's not a large number, but it's an important number to us to make sure that we can meet that number. And again, I would imagine that the costs associated to it may be even more robust next year when I can give you a little bit more of a internal in-house communication process, again, and less dependence on the mayor's office and the communication of the folks up, the communications director, et cetera. We're going to do a little bit more in-house.
Yeah, no, and I agree, and I appreciate that. Again, if you come back next year and you guys have a robust plan and that number needs to go up, I'm all for it, again, because it facilitates communication with residents across the city, and again, just not even with the downtown, but across the entire city. I mean, your department is responsible for all of those projects, so it's a lot of different mediums that you guys have to use, and a number of projects that you guys have to communicate on. And so if you're able to tailor a way to do so in such a way that is effective and it ends up costing more next year, all right, but at least you're effectively communicating. My concern is that we're not using the resources that are there to effectively communicate how much gets done in your office and in your department. And I commend the work that you and Rob do. I think that you guys take on a lot, across the city and with the downtown, which is why, again, when I see the number, it's not so much that the number is a high number, like you said, but it's how much of that resource have you used to date that is concerning.
Well, if we would take, for example, the Wollaston, the Wollaston Urban, redevelopment charrette that we had in the booklet that came out afterwards to kind of, talk about what our findings were. Those were produced in-house. They were color, and they were expensive. And when I asked what the internal cost on that was, it doesn't show up in the communications line because it shows up in my printing, in my copying line, my copying machine, my technical line. So we're going to try to, find a better way to do that because I'm just eating my copying line that
Yeah.
should be probably used out of the communication line. So there's a little pivot going on in the department as well as far as that production of that type of project. Maybe we should be outsourcing and not printing in-house, where the expense of the in-house printing might be a little bit higher due to the fact that we're putting those booklets together in-house. So that's the intention, is to be able to shift that information into communications.
Okay, thank you. Yeah, and again, if you could not just copy myself, but the rest of my colleagues in those communications and how you guys are going to actually, use this line item to communicate with the residents of the city, I think it'd be helpful for all of us, particularly the ward counselors, to have that information as well. So if you could do that, that'd be great. Thank you. Thank you, Mr. Chairman.
Sure. All right, Councilor McCarthy, motion on the floor. All those in favor? Those opposed? All right, thank you, Jim.
Thank you.
That concludes this evening's Finance Committee meeting. Please join us on Monday, where we will be discussing the LDA, 6:30 PM.
And we'll have a budget on the